Hi, folks. Welcome to our podcast, The Growth of Blockchain. That's what we're going to talk about today. So, if you can hear me, just raise your hands so we can just get started. Good morning again. Hey, guys. Thanks. Okay, thanks for doing that. Let's get right to it. So, today we want to talk about blockchain, Bitcoin, or the whole digital space. I want to take like a top view, like a top-down view of what's going on in the market. Let's talk about the history, the antecedents. Let's see what's going on. I'm more trying to create a discussion about the genesis of blockchain, the differences between blockchain and digital currencies, and what it means for us as investors. So if you have questions, do go ahead and ask on the Q&A, but I will take those questions at the very end so we don't interrupt the flow. And I'll see you guys at the end. Enjoy the presentation. First things first, just want to say thank you to our sponsors that allowed us to get this done today. That's the handle, and someone else that wants to remain anonymous, they all give about $300 for us to sponsor this. So thank you, we are appreciative. This is what we're going to talk about today. What is crypto? What is blockchain? Why are they valuable? We're going to talk about Bitcoin, how it's come of age. We're going to look at the rally of Bitcoin, why Bitcoin and why ETH, Ethereum. And then let's talk about risk, and then we're going to close. So just for us to understand the terms we're going to use to define what we're going to say, like when we say blockchain and we say cryptocurrencies, just to be clear, the blockchain definition, to get that out of the way, is the growing list of records called blocks that are linked using cryptograph. So cryptocurrency basically are currencies created on decentralized networks, blockchain, or digital money created from code. So in essence, what are we saying? Yeah, we have the blockchain and we have the cryptos. I think there's always a misconception. People use the cryptocurrencies when they want to talk about the blockchain, or use the blockchain when they want to talk about cryptocurrencies. To be clear, the whole idea, we cannot talk about cryptocurrencies without first understanding the blockchain. The blockchain is the DNA, it's why we have the crypto, and the blockchain is actually the success of what's going on. The cryptocurrencies are simply currencies that are created sitting on the blockchain, and the blockchain is simply a list of records that are linked together and are verified by multiple systems. So look at it this way. You do a transaction and everybody that you have in your office, for instance, can verify that transaction as being accurate. That's what a blockchain really is. So because it works that way, it's difficult to quote unquote forge or to corrupt a system or to create fake invoices. Imagine if you were in a company where you did not have to verify each individual invoice because the entire office was basically working to audit the entire process. That would make your life a lot easier, wouldn't it? You would know that every transaction coming through has been verified. That's what the blockchain really is doing. Because you can verify every single transaction, it gives you a higher level of confidence. It allows your transactions to occur at speed. That's the blockchain. That's basically what it is. The cryptocurrencies, someone just created a currency sitting on the blockchain. And this allows that currency now to be used to settle transactions online because you can verify that that currency is real. Hence, you can sell pizza or sell a Tesla to that person because the currency he's paying you has been verified as being real and cannot then be used or cannot be faked, more or less. So the whole idea of cryptocurrencies is because there's a blockchain. And that whole blockchain, look at it as a series of computers that verify transactions. So Bitcoin is just the first of many types of digital currencies that sits on this decentralized network called the blockchain. And BTC is Bitcoin, ETH is Ethereum, and basically that's what it is. So we're going to use a lot of Bitcoin in our examples. When we say Bitcoin, we mean Bitcoin. When we say cryptocurrencies or the blockchain, we mean a separate term. So just make sure that you are following, and we're also trying to keep using the right terminologies to describe the right assets, as it were. But why are blockchains themselves valuable? So we had Josh Nussbaum give a very succinct reason. He said the ability to reach a shared truth that everyone agrees on without intermediaries or a centralized authority. So look at it this way. Even if you want to use blockchains for elections, or you want to use blockchains for verification of a transaction, because everybody can agree without an intermediary, it makes the cost of transactions cheaper. It makes it transparent. So if I know I can send money from myself to somebody else and that transaction is verifiable and real without any extra cost, it increases my productivity. It makes my business turnaround time faster, and overall, it makes my life better. So that's really the valuable property of the blockchain itself, that, a shared group of people across the world can agree on a transaction because that transaction is centrally verifiable. This is why blockchains are valuable. And this is why cryptocurrencies, which are sitting on blockchains themselves, are valuable. So what's the difference between blockchains, i.e. between Bitcoin, which is the digital currency that sits on the blockchain, and then what we call fiat money, the normal naira, dollars that we hold? What's the difference? Just a few, just for us to get it out of the way. The Bitcoin itself is a currency created by code, you can use it that way. It's decentralized, it's distributed computing. So it's a currency created by code on the blockchain. The fiat currency is just currency created by the central banks or by the government. So it can be printed more or less. Bitcoin, they call it mining. So you mine Bitcoin and you can quote unquote print fiat money. And the transactions between Bitcoin are just between two parties. We have no intermediaries. So what we're saying is that the central computing system verifies the transactions once it happens on the blockchain. But in the fiat currency, we need a central bank, either the Fed or the Central Bank of Nigeria. They basically manage the money supply in the economy. They can print, they can create, they can reduce money supply as they deem fit, right? And the network speed, of course, for cryptocurrency transactions is a lot faster because we're using a lot of computers, so there's a lot of computing speed. So if you have a high data center and high data area, you can do your transaction a lot faster. Meanwhile, in the fiat currency, it can take maybe weeks or days, depending on the jurisdiction that you are sitting in. So the Bitcoin and the fiat money are both currencies, but the Bitcoin is the digital currency that sits on the blockchain. Meanwhile, the fiat currency could be coins, it could be digital itself, or it could be just paper money controlled and issued by the central bank. Yeah. This is a very nice chart, the money flower, where we try to identify all the different types of currencies in the world according to certain categories. So if you look at the words on the outside, is it widely accessible? Is it digital? Is it central bank issued? Is it peer-to-peer? You then have the currencies in those circles. So if you look at cryptocurrencies, we're at the bottom left, private digital tokens. So cryptocurrencies, according to that circle, they are digital and they're also virtual currencies itself. So they're in that circle with also peer-to-peer token-based currencies, more or less. That's the space that crypto is occupying. You also have cash, which is not crypto, and the cash occupies a central bank issued space. So this is a very nice way to describe the ecosystem of currencies out there. So you can have a virtual currency in itself, or that is like the Chinese yuan that has just been issued, a new digital currency. It's not a cryptocurrency per se. It sits on the blockchain itself, but it's basically a digital currency. So there's an intermingling of different categories of currencies. Some do not sit on the blockchain. Some are central bank currencies. Some are paper. But then this is basically how we identify and we segment all those currencies that are available. So it's a good chat to see. And again, I'm going to post this video on YouTube, so you can go back and look at the screenshots once we're done. So I'm going to answer the questions at the end. No worries. Let's just continue and I'll answer all the questions at the end. So Let's now we've talked about the cryptocurrency, we've talked about the blockchain. We've said the blockchain is the network set up by computers and that creates the digital cryptocurrencies, which are currencies created by code. Let's talk about Bitcoin. Bitcoin is all the rage, and Bitcoin really has come of age. This is a chart in about 2017 where we see the top banks, Goldman Sachs, Morgan, and Bank of America, start to talk about cryptocurrencies seriously, start to take it seriously. And you can see them basically saying almost the same thing, basically saying, listen, cryptocurrencies or Bitcoin particularly is going to basically come in and change the way we do business. Literally, you're seeing Bank of America saying it's going to be a widespread adoption of new technologies, and including cryptocurrencies, which could require substantial expenditures to modify or adapt our existing product and service. So it's the same sentiment across the board from these huge banks that this Bitcoin, i.e. cryptocurrency, is going to be a huge disruptor that we have to get ready for. It's going to change how we do banking. It's going to change how humans interact. So we have to get ready for it. This is way back in 2017. But way before then, if we even go back to 1990, we see the concept of a distributed computing, of creating that network, that blockchain start to take place. So about 1990, we had the systems already starting to take place. And in 2009, we then had Satoshi basically create Bitcoin to sit on the distributed network, i.e. the blockchain. And you can see the development of cryptocurrencies along the line. We see cryptocurrencies related to cash, we see transactions, we see smart contracts, which I think in my view was what really boosted the cryptocurrency market to where it is now. The ability to create smart contracts using the ETH. So from 1990 all the way to 2016, tons of improvement that have occurred that have now pushed the utility, the usage, the universal usage of Bitcoin, of ETH to where it is now a serious currency that banks and institutions are holding, right? And the same chart, but now attaching companies that are basically been working with Bitcoin, trying to make Bitcoin and ETH based transactions a reality. And these are big players. You see ING working on faster payment services, and Rabobank partnering with Ripple Labs. You can see USAA, large insurance company, partnering with Ripple. So Citibank trying to develop Citicoin, and they're basically trying to do all this mostly using the ETH or mostly trying to use Bitcoin to do transactions. So, I mean, what these slides are telling us is that Bitcoin really has gone through a lot of development. It's getting mainstream. All these banks are either exploring how to use these digital currencies or are already using them. So this is here to stay. This is not a fad. This is not some guys trying to trade online. No, this is very, very serious technology that is being looked at by very, very serious banks and brands across the world. And you see Bloomberg reporting that BlackRock, now BlackRock is going to be the largest asset manager in the world, that BlackRock is taking the first steps into crypto exposure with two funds. So BlackRock essentially is going to offer crypto to their clients. And this is the largest fund manager in the entire world. So this is like a sign of approval in quote that cryptocurrencies, especially Bitcoin, which is basically what I think they're going to offer, has come of age. And there are tons of examples like this I just pulled out. You see Morgan Stanley making the case for cryptocurrencies as a serious asset class in a diversified portfolio. Of course, Morgan Stanley being one of the large investment banks in the US, you see a whole bunch of US and global banks talking about blockchain, talking about cryptocurrencies, some talking about BTC and ETH. Fidelity, one of the largest asset managers in the world, issuing a fund for ETH and BTC. BlackRock, like we was talked about, Wells Fargo, Standard Chartered. So the ecosystem, that's the story I want to pass along. The ecosystem for cryptocurrencies, for BTC, for ETH is strong. This is a serious thing. This is not a fad. And you have to start to take this pretty seriously. Same thing if you look at the country of issue, you look at the funds now. We've talked about the individual companies doing the cryptocurrencies. We now have listed funds, like how you have mutual funds and unit trust that are now issuing cryptocurrency-backed funds in Sweden, in Canada, in Germany, and in Switzerland. And we already have those funds raising millions of dollars to invest in cryptocurrency, currency itself, and also companies that are based in that ecosystem. So again, it's same message. It's a serious business. It's a serious players are getting in. So if you are in, you're basically in good company, more or less. Now, Chairman Powell, the Fed chairman, the US Fed chairman, did say that Bitcoin is more of a substitute for gold than for the dollar. So the context he made that statement was he was asked about Bitcoin, and he was trying to say that Bitcoin is not a threat to the US dollar, but more of a threat to gold. So we've seen Bitcoin being described as digital gold. So because of inflation, gold is normally the flight to safety. So when investors feel that there's inflation, they all run to gold. But what's going on right now is many investors are substituting Bitcoin for gold or the other way around. So people are buying Bitcoin to hedge against inflation because of the COVID. There's been a lot of printing and spending of money by governments. So there's a feeling that the dollar and the yen and the euros are seriously overprinted and that this could be inflation down the road. So Bitcoin is more or less like this look like as a digital gold where you can store money and keep that value from being depreciated due to over issuance of fiat currency. So this is a powerful statement the way I look at it. The Fed chairman, even though he might not agree about the efficacy of Bitcoin, is basically saying that Bitcoin could be a substitute for gold. So again, a serious player in that business. And this slide just talks about all over the world where we are in terms of Bitcoin. Some are some are in development, some have launched. We know China has launched the digital yuan. We know UK is looking at this seriously. We know India wants to do a sovereign crypto sovereign digital currency. So all over the world, people are working to bring out a currency basically that can replace fiat or can help to attract investments. We know the city of Miami wants to be the first city that will be, you can pay all your government services with Bitcoin. They want to lead in that arena more or less. So all over the world, things are happening. We have the large banks doing this. We have countries launching cryptocurrencies, digital currencies, and even blockchain-enabled products. So this is happening, guys, and you have to basically be in that arena. Let's now talk about Bitcoin. We've explained cryptocurrencies, we've explained Bitcoin and ETH, we've talked about cryptocurrencies coming of age, how the global banks, even how nations are adopting Bitcoin and ETH. What's really driving this rally now with Bitcoin? Why you've seen Bitcoin go from 18,000 for one digit all the way to about 60, which has come down now? It's really institutions buying into Bitcoin, institutions giving Bitcoin a seal of approval. So this is a nice chart that talks about Bitcoin's monthly returns. And so if you look at 2021, I think this is the first time from October last year till this was done in March, when you the first time in a long while, which you've had 6 consecutive months of positive returns, monthly returns by Bitcoin. But if you look at the map, there's lots of red, there's lots of green. So you see 3-month profit, you see 5 months negative, say in 2011. But as you tend to look down on the chart, you tend to see more of the greens popping along. So Bitcoin is a very, very volatile asset class. You know, it can go up, it can come down, it can swing $5,000 in one day, just like we've seen it do. But this has been driven more or less by big players coming to this space to buy into Bitcoin. And that's what's causing those wide variations in price. If you look at the return of Bitcoin and you compare it over a 10-year period with gold, with the S&P 500, which is going to be the issued equities in the US. The Nasdaq, same thing, an index for technology stocks that are issued in the US, more or less. Long dated US treasuries, i.e., you are borrowing money to the US government. Look at Tesla and Amazon. So if you compare Bitcoin with all these other classes, I mean, just visually over a 10-year period, Bitcoin is doing give or take about 196. The highest is about Tesla doing like a mere, this is me using the word mere, 63%. So over a 10-year period, even though you've seen a lot of volatility in Bitcoin, it's delivered. It's really, really delivered in terms of returns to the investors because big boys are coming into that space and are pushing up that asset price to new levels. Look at the adoption. This chart is basically talking about the adoption of different asset classes. And you can see the trend line for other stocks. You can see gold. You can see the Nikkei, which is a Japanese stock exchange in the 1980s, how it basically blew up. You can see the NASDAQ in the 1990s, the black line there. You can see commodities. You can see Chinese equities in 2000 when China was really, really hot. You can see FANGs, which is the Facebook, Amazon, Netflix, Google in the US, a group of those stocks in the US. And then look at Bitcoin, look at the adoption, look at how fast it's gone from 100 to 100,000. That's i.e. that's going to be on a scale basis. So clearly this is a fast moving asset driven by adoption, driven by utility. That's the key word. As the utility of Bitcoin is going up, you see the price going up as more and more people are using Bitcoin and are using ETH. Yeah. Same issue, same story here. You look at Bitcoin, you compare Bitcoin with oil, with global stocks, with the US dollar, with high yield bonds, with investment grade bonds, with government bonds. Q1 2021. This is just 2021. Bitcoin is doing about 103%, i.e., as at Q1 2021. Oil, surprisingly, is doing 26. But again, Bitcoin is beating every other asset class out there. Why? Everybody is buying Bitcoin, not just the retail guys, but the institutional guys like we've shown you before. This rally is being driven this time by institutional players. In the past, you had lots of retail players buying huge blocks, but this time, last year, this year, this rally is being driven by the institutional players. Same thing here. Let's talk about Coinbase. So Coinbase is the largest exchange where you can trade digital currencies, cryptocurrencies. So Coinbase could be looked at as a proxy to Bitcoin because Bitcoin is the largest asset they trade on Coinbase. If you look at the market capitalization of Coinbase, which was just recently this month, um, went public this month. If you compare that to the Japanese stock exchange, the Hong Kong stock exchange, and the Singapore stock exchange, if you consider the years of business those other exchanges have had, and you compare the market cap of Coinbase that was just out last month, and it's just basically a cryptocurrency trading platform. I mean, you can just visually again see how large Bitcoin has come in such a short time. So Coinbase now has a larger cap than the Japanese stock exchange itself. This is just the exchange itself, not the stocks on the exchange. So that's again massive, and it goes back to the same story we're saying. Bitcoin has come of age. Lots of global brands in financial sector have adopted it. So it's a serious investment. It's not a pastime. It's not going to be a fad in my view. This is a serious thing happening, right? Okay, so we've talked again, just to recap, we're talking about cryptocurrencies, we're talking about the blockchain, we've tried to analyze why the market is going up for BTC. We've said it's about utility and big players coming to that space. So let's now get a bit specific. Why are BTC and ETH? Every other cryptocurrency is rallying, but these two guys have really been the guys that are leading the way in terms of massive price appreciation. Why are they basically going up in price? I mean, the first thing is that you can fake fiat currency. You can't fake Bitcoin. Remember what we talked about at the very beginning. Cryptocurrencies are created by code, and those codes are verified across the network. So because it is real, that's one key thing that makes the market for BTC, ETH, and other digital currencies keep on going up. You can't fake it. So if you cannot fake or corrupt the blockchain, you can do a lot with the blockchain, not just currencies, but as long as you know that whatever transaction is on that blockchain cannot be faked, then you can build tons on it and people will buy because they know it cannot be faked, right? This is basically the ecosystem of the blockchain, everything that has been done really in that system. And it shows you not just the depth, but the kinds of players and what you can get done on the blockchain. So, like say, cryptocurrencies is just a part or it's just the most common usage of the blockchain. So you have your currencies, you have Bitcoin and the rest as currencies. But you also have payment systems like Ripple. You also have privacy systems like Dash. You have developer tools, you have sovereignty, you have fintech, lending like Salt and Repo. You have vault exchanges, you have how you can share data, you have how you can authenticate data like Factom, yeah? You have how you can predict markets. So all these companies, all these products, all these brands are all playing using the blockchain, either creating apps that are being used run on ETH or currencies. And this ecosystem is telling us that the cryptocurrency in itself is just a facet of the blockchain, and that as we keep on going into the future, we are seeing a world that is more and more and more becoming digital, becoming, i.e., in quotes, blockchain enabled, and this is just the start. So we might be at the very, very beginning, not at the very, very end, the very, very beginning of a .com in terms of cryptocurrencies and in terms of blockchain. So cryptocurrencies might basically evolve going forward from just the currency part to us now using the blockchain to do lots of other verifications that would then increase the price and the utility. This is the key point here. The utility of Bitcoin, as long as it keeps on going up, the price does keep on going up as well. So great chart to look at, to print out and to keep and to refer back and say, okay, what can we do with this? Can we build something like this? Can we look at what someone is doing and try to be competition? So the slide I'm talking about now is why BTC, that's Bitcoin and ETH are rising. And you can see some, I just pick an example of banks that are now using the blockchain to speed up payments. So JP Morgan has got its own coin, it's internal, but Santander is looking at it internally and externally to transfer monies within the bank and outside the bank. So of course, because it is safer, you can't basically hack into the blockchain itself and create a different transaction message. So it's a bit more secure. So HSBC, Signature Bank, these are just examples of banks that are now using Bitcoin or the blockchain in a practical method to do money transfer between their clients. And in JP Morgan's case, they're the largest bank in the US, obviously. So they have their own stable coin pegged to the US dollar. So what they want to do with the JP coin is if you go to JP Morgan and you want to send money, they can send funds instantaneously and verified for you at no cost, literally. So instead of using Swift, for instance, and you paying a fee, they can instantly send funds within their network from one point to another point, from one node to another node, fast and cheaper. So imagine the productivity gains. Imagine if you were a customer of JP Morgan. Imagine if you were, say, Mercedes-Benz and you were in Germany and you want to send money to the US. You could do that instantaneously and get audited and get your funds into your treasury at no time, at no added cost. This is the utility we're talking about. This is why this time, this rally of Bitcoin and ETH looks different. The first rally, I mean, rallies are always speculative in nature, but this rally is being driven, in my view, more by an appreciation that the utility of Bitcoin is now coming mainstream. That if the banks like JP Morgan are now creating stable currencies using the blockchain, then it rubs off on the entire ecosystem, which means that all the smaller banks could also do their own blockchain stablecoin enabled currencies and also do transactions. And then, of course, the industry just keeps on growing bigger and bigger. The biggest thing I see that's going to happen in the space is going to be Facebook's DM. Used to be the Libra, now the DM. Because what Facebook is going to do, if it gets it correct, is to allow everybody with a phone have the ability to transfer money across borders and across jurisdictions. Look at it this way. You would no longer have a national currency per se. You would simply have a phone number. If you have a phone number and you have Facebook or Instagram, technically you would have that a currency that is global. You can in Nigeria buy goods on Amazon because now that currency is verifiable on the blockchain. Amazon would not really care to say, hey, let's verify credit card or let's verify country of issuance. No, you have access with your phone via the blockchain using Amazon or Facebook's DM to do transactions across the world. You can do money transfers without going through traditional banks. You can send $1 from the US to say Nigeria at no cost because you simply go into Facebook either through Instagram and send money to your friend on that platform. Now, what Facebook wants to do is to do a stable coin, which means the currency is going to be tied to the US dollar and to other group of basket of currencies, but for now, just the US dollar. This is going to be massive if they get this right. I mean, think of it. You can transfer money as long as you have a Facebook page or an Instagram page, which is already owned by Facebook, or even a WhatsApp. You can transfer goods, you can pay for goods. So think of what would happen. You can sit in Nigeria, put load money, which they will create obviously on your Instagram or on your WhatsApp and make a payment. Think of what that does for commerce in local Nigerian space. What would happen in the rural villages where you do not have cash? You don't send a lot of cash. You could sit and pay your plumber or send money to your mother in your village, and she can spend it on her phone. What will happen? Lots of people will start to adopt whatever currency, i.e., the DM that Facebook will do. And once DM is successful, you would see other institutions, say Apple, Google, that have a network of users also launch their own blockchain enabled stable coins. And this only adds to the adoption, to the utility of the system, making BTC and ETH start again to look like goodbyes to have in a portfolio. If you have it today, it's going to look like a better buy because now globally in India, in Nigeria, in Pakistan, in the US, this is being used to transfer money and also to store value. Not everybody would like it. Some banks are going to really be on the receiving side of this disruption. So why not get ahead of it? You are not going to stand in the way of this. I've shown you slides after slides of banks adopting blockchain enabled technology. So get ahead of it as a company and ask yourself, how can my company be blockchain enabled? It's the same thing as asking yourself, how can my company be .com? This is exactly what's happening. If you are not .com, you can't do global business. The same thing. If you're not blockchain enabled, you cannot also do global business. Tesla is accepting BTC as payment for cars. That is easy. Anybody can accept a cryptocurrency for payment of an asset and simply go back and convert that cryptocurrency back to cash. What is key about Tesla's decision is that Tesla is saying they are going to hold the BTC on their balance sheet. So think of what's going to happen when Tesla announces its results. It's going to file with the Securities and Exchange Commission in the US a balance sheet that would include in that balance sheet they are holding Bitcoin. That's basically what they're going to say. What will SEC say? Will SEC say Bitcoin is not regulated or Bitcoin on your balance sheet is not acceptable? So you can see what Elon Musk is doing. He's trying to make Bitcoin become legal tender by fiat. Because if he holds it on his balance sheet and he's a Fortune 500 company, he's on the Dow, if he owns that Bitcoin on his balance sheet, that's a game changer. If SEC says that is okay, then invariably SEC has given approval for Bitcoin to be in quote unquote legal tender to be held. Right now, SEC is classified by the IRS as an asset, so it's taxed as an asset. But the Commodities Futures Exchange also regulates Bitcoin. But it's a bold move by Elon to say not only can you buy a Tesla with it, but we're not going to convert that Bitcoin to cash. So watch this space. This is the test now. This is the test that Elon Musk has set up. And if Elon Musk is successful, this simply accelerates the usage and the utility of BTC and ETH, in my view, and simply adds to them becoming more valuable assets. Like I said, because the blockchain is secure, you can build lots on it. So this is one, not just currencies or payment systems. What about elections? So Alaska wants to use blockchain to verify its voting system, i.e. the voting records. So what they're going to do is they're going to say, listen, we're going to have a blockchain where if you register, we can instantly verify you. So there are no fake registers and fake guys on the voting polls anymore. Again, think about what would happen if INEC used the blockchain to register Nigerians. So you can't have two Nigerians on the same register. You can't have two people voting. That would be a game changer. So again, it's not BTC, it's not the cryptocurrency. The real power behind all this is the blockchain. Once you have a system that cannot be corrupted by fakes, then you build something that you can create tons on. You can do voting systems, you can do payment systems, you can do currency. So we are literally, in my view, at the very beginning, not the end. We're just starting out to see, understand what blockchain can do. And it's going to change how we interact, how we trade, and how we do business, and also how we vote. Like you can see the guys in Alaska doing. And of course, I think everyone's going to start to do this. How else can you verify elections if you can verify that everyone that votes has a unique identifier? Then your vote is going to be better. So that's what we're saying. Look at BP. BP is an artist, and we're talking about NFTs, and NFTs are non-fungible tokens. So this is just under use of the blockchain. And we're trying to show you why BTC and ETH are rising in price, because you are seeing the various uses of these cryptocurrencies of the blockchain, not just as a currency, but as to do elections, to do artwork, and to purchase items like the Tesla. This painting was sold for 69 million. So what you're looking at is a painting that is verified by a certificate, a digital certificate. So it's called a non-fungible token. So when you buy it, you can basically have a certificate saying this painting is original. It can't be forged. And for that honor, you pay 69 million, which is what you're looking at. It's a painting, more or less. But what is important is this: NFTs markets are now being built using the blockchain-enabled technology, and we have lots of art, lots of memorabilia. You can sell your first tweet like Jack did from Twitter and make a lot of money from it. So you're seeing memorabilia being converted to NFTs, which is simply the blockchain and being sold. Again, it's pulling in new users into this ecosystem of the blockchain. And as new users come in, they tend to start to use cryptocurrencies or digital currencies like BTH, BTC, and ETH. And of course, the usage starts to get more and more, the utility starts to go up, and the price starts to go up. That's what's going on, guys. We're seeing lots of uses, art, assets, elections, and it's just increasing the price of those commodities and those assets. Saudi Arabia, the central bank is signing a blockchain deal with Ripple. So Saudi is going to sell oil. Their banks are going to be set up using the blockchain-enabled technology. So they might tell you in future, pay us in Saudi coin or pay us in this crypto or that digital currency, basically. So this is where the governments are going. We've seen Tesla going there. We've seen art going there. We've seen entertainers do shoes and sell the NFTs. So the usage is growing. Utility is growing. And if utility is growing, usage goes up, demand goes up. If demand is going up, then of course prices are going to keep on going up. That's why you're seeing ETH and BTC go from the low digits, say BTC's case 18, to now 55, 65, and all that. It's just that's the whole reason. What about personal utility? We've seen Ross Okung say, hey, I want to be paid in Bitcoin. He gave the tweet, and now he's saying, yes, I've been paid in Bitcoin. More people are going to start to demand to be paid in Bitcoin. Is your company ready? What if your employees say we want to be paid in Bitcoin? Would you say yes? Would you say no? Would you say that's a stupid idea? He's getting paid in Bitcoin. He's a footballer, NFL player, and he started a revolution. And I think more like this is going to happen, where players demand that they want to get paid in Bitcoin. Because, hey, if you get paid in Bitcoin, at least the value doesn't go down. Imagine if you were paid in Bitcoin in Nigeria. If there's a devaluation of the currency, you're okay. You get the same amount of money. So that might be a way for you to hedge inflation. If your company says, I'm going to pay you guys in BTC every month, that might be a good idea to say, okay, even if you are paying someone 100,000, it's still going to retain its value. Yes, there'll be fluctuations, but is it higher, or are those fluctuations going up or coming down? Could we stomach that fluctuation when compared to inflation? That's going to be the question really for us. And look at MicroStrategy. They're a company and they're now paying their directors also in Bitcoin. So I mean, it's the same story we're just repeating through various slides. Individuals want to be paid in Bitcoin. Companies are also paying directors in Bitcoin. Cars can be bought in Bitcoin. Art is now being converted to NFTs. What are we seeing? Utility is going up. It's making demand go up. And if demand goes up, price is also going up. Let's talk about the risks. We've painted a beautiful story about the blockchain, about the cryptos, how they are safe. Are there risks to this story? Of course there are. So let's get responsible and talk about the risks. Of course, the first thing we have to talk about is this. People really, really, really do not use Bitcoin to trade. Yes, there's trades going on. Yes, you can buy the Tesla with the cryptocurrency and all. But in terms of the volume of what people can buy day to day with Bitcoin, it's not really a lot, you know. It's growing. You see lots of, there's art being sold for 69, but not all art is sold for 69. So the Bitcoin rally, like Bloomberg is pointing out, not a lot of transactions are being done by blockchain. I mean, not more than 10% of global trade is being done with cryptocurrencies or with digital currencies. So this can be a threat, it can be a risk, it can also be an opportunity, but it's a fact that we have to mention. So it's growing, but it's not yet there. So that's the risk for us, that even though the market is growing and adoption is growing, it's not yet there. This was a poll. People were asked this poll, 2011 US Census 18 plus age by Civic Sciences. And they asked the US consumers, which of the following best describes your experience with crypto? So only 5% of the respondents in the US says they invested in Bitcoin and they like it. Some said, I invested, I don't like it. 7% says they plan to invest. 66% says they are not interested in Bitcoin, and 18 says they've never heard of it. So 66% is material, it's large. These are people saying they've heard about Bitcoin, but they are not interested in Bitcoin. So this again is a risk to Bitcoin, that even with all the hype, with all the noise, still a lot of people are not interested. But remember, when when the internet first came out, how many people did you think adopted the internet and the .com? How many? So this just gives you a pointer to what's going on. What about taxes? There's this notion that cryptos are anonymous. They are not. Cryptocurrencies are not anonymous. The transaction could be anonymous, but the person making the transaction can be found out. If you go to an exchange, you have to register. If you buy Bitcoin on a kiosk, you have to use a debit card, and your debit card is linked back to a bank. So it's difficult to just take cash, buy crypto, and then have crypto and then convert it back to cash. It's difficult to do that in reality. There is always a part of that process where you have to show ID, either to buy it or either to redeem it. And of course, the IRS is very, very interested in cryptocurrencies. They want to tax it. So you can't tax who you don't know. So IRS is going to tighten the notes going forward, and basically say, if you own Bitcoin, we want you to know right now, if you own Bitcoin and you're an American, you have to file that on your tax returns. So this is also a risk for crypto. It's not anonymous. You will have to pay taxes on it. And I think, in my view, the biggest risk that cryptocurrencies will face, and even digital currencies will face, is the government creating their own digital currency. The Chinese have already created the digital yuan or digital renminbi. Every Chinese person that deals with the government will have to use that currency by fiat. I mean, they're going to force everyone to use it. Libra, that's going to be the Facebook, the DM. So that's going to, and of course, Bitcoin. Now imagine if the US government were to create a digital dollar. What would happen is that even people, that's 66 that says they don't want to use Bitcoin, they would use that digital currency created by the US government because it's created by the US government. So in quotes, it will be safe, it will be legal. That will not be a cryptocurrency. It will be a digital currency, but that would take a lot of energy away from Bitcoin because people that are just trying to use cryptocurrencies or digital currencies created on private networks might be tempted to use the government's own digital currency because in their minds it's going to be a bit safer. You see, in India, India wants to stop all private digital currencies or cryptocurrencies, and India wants to create its own national digital currency. That to me is the biggest risk, where governments adopt the blockchain and then kick off the private sector from the blockchain. So that would reduce or make Bitcoin this niche of just people online that want to avoid the government and will not bring it into the mainstream. So for me, that's the biggest risk, that the government will actually adopt the blockchain tech, but will kick off the private sector from the blockchain tech and now own that space. That to me is the biggest trick that I see. We're going to close in a few seconds, but I thought it was time for us to just touch on what's happening in the markets, where we see the enormous correction of BTC and ETH, and even the dog meme coin go down. So why do we think the BTC and Ethereum are going down in price? I have a theory, and it's pretty easy. The U.S. President Joe Biden has introduced a new proposal to tax capital gains by a hike of almost 100%. So he wants to tax capital gains at about 42%. What that means is if you buy an asset, shares, cryptocurrencies, house, any asset you buy and you sell, when you sell it, you make a profit. Capital gains is taxing that profit that you've made on the sale on that transaction. So if I bought Bitcoin for $100 and I sold it for $200, I've made a profit of $100. The US government wants to take 45, give or take, of that $100. So what does that tell you? If you trade and you're a successful trader, you're going to pay a tax of almost 50% of that trade to the US government. So what's going on is that the stocks and the commodities that have gone on in price, that have gone up in price, like Bitcoin. Remember the charts I showed at the very beginning, where Bitcoin was beating gold and beating other asset classes. Because they have gone up in price, they have generated enormous capital gains for investors. So when investors are seeing that the government is going to tax them in the future for that capital gains tax, many are selling today to take their profits and run away. Maybe go buy something that's going to be tax protected. So you see the successful stocks, the Bitcoin that is very, very successful, ETH that is very, very successful, stocks that have created enormous capital gains being realized, i.e., being sold, and people taking the cash to go somewhere. That is my theory, just the way I see it. So when all that settles down, I think we're going to go back to the story of utility, because the story of Bitcoin has been a story of utility. It's come off the blockchain. The blockchain has proven itself to be secure. Lots of financial institutions have used it and have tested it and have said this is a true thing. And the currency is just a proxy of the blockchain. It's reflecting the utility, the usage, the security of that chain. And that's why the price has been going up. I think I agree with the people that say we could see a six-figure Bitcoin. I don't know what year it's going to be, but as long as utility keeps on going up, then I don't rule out the fact that you might see Bitcoin post a six-figure unit price. Again, just Bitcoin and just ETH. If you notice, I just kept my universe to just those two stocks. The reason is simple. There are tons of cryptocurrencies out there. There are tons of digital currencies out there. You have to be very, very particular to pick. If you're going to eat a frog, more or less, yeah, eat a fat frog. So if you're going to buy crypto that is still at the very, very infancy, buy the ones that are big, buy the ones that have got a high utility. So ETH, even in my view, has a higher potential than BTC. because of how it's being used by the banks. So if you're going to be in that space for now that is still unregulated in quotes, try to be with the big players. If you want to trade, yeah, you can go in and trade and take a gamble or take a risk on smaller currencies, smaller coins that will turn around and make money for you. That's going to be your call. That's going to be your risk profile. But if you basically want to be in this market for now, I would recommend you just be in the top players. You can extend your universe to say top 10 cryptos by market cap. That's again based on your own risk assessment and your own objectives. But I just want to stay in that space of just the big two and see how things play out. So just in closing, the blockchain is the new internet. Look at the blockchain as what was happening with the dot-com boom. When we have pets.com, you had Amazon. Look at the growth of Amazon. It's basically an internet play. That's what's going on right now. So the world economy is being changed into this new format where people are being connected via the blockchain. Think of what would happen if Facebook actually gets its digital currency out there. Think of what will happen in transactions, how people would use that Facebook currency to do trades and to settle transactions. So as more applications become chained, i.e. become blockchained, utility is going to keep on going up. And if supply keeps on staying the way it is, like blockchains cannot be printed more than a certain number, and demand remains strong, then the price is going to stay elevated. So again, like I said, if you're going to eat a frog, eat the fat frog, right? So this to me is just the summary of all we've talked about today, the evolution of the blockchain from coins to cards to digital now to the blockchain. So we can't really argue with progress. Change is going to happen. We can say change will happen today or change will happen tomorrow, but change will happen. So don't fight it, get ahead of it and invest in it. So that's it, guys. This is just a call to action. Follow us on our podcast the way I see it. Follow me on YouTube. Follow me on Twitter. Support us on Patreon. We do appreciate all you guys. We try to do this at no cost. The sponsorship you see is sponsorship for Zoom. I don't personally charge to do this. I do this. My time is also donated just to get information out there. We want to make sure there's financial literacy. I have a passion to make people more financially literate. That's what I do on Twitter, on Facebook. So if we do more and you also want to sponsor, the sponsorship is just for the Zoom. You're not paying me for my time. My time is already donated. Talk to me on DM and we can get more of these topics out there to do with the budgets, do with other stuff that we think people might also like. So we've ended now, guys. I'm just going to take the Q&A. Everything's going to be recorded and going to be put on YouTube. So I'm just going to take the questions, answer a few, then we'll shut down the recording, start to get it all set up, and it's going to be posted on YouTube at no cost. Yeah. So who owns the base money in Bitcoin? Who created Minefield? Bitcoin was created by a guy called Satoshi. Yeah. You can only have 21 million, I believe. So it's out there. It's just verified transactions. I think if you want to use the language that these guys use, you mine Bitcoin. So when you verify the transactions, you are paid in Bitcoin. So the miners get the Bitcoin and then sell to the exchange, and then we buy from the exchange, more or less. So Sadiq is asking, you mentioned that Bitcoin rises as people buy it. It means we'll do otherwise if people don't. Yes. Bitcoin, just like gold, doesn't do any work. That's it. It doesn't get any earnings. How do you recognize that it's not under tulip mania? Yes, Sadiq, Bitcoin is a bubble, but remember, I've taken pains to show you the utility of the blockchain. I've shown you how it's been used in elections, how it's been used in currencies, how it's been used in medical devices. So the point I'm making is this. It's no longer just a tulip mania. There are real life examples of the blockchain. Imagine if we use blockchains now to do elections. What is the currency of the blockchain? That's Bitcoin. So it's like if the internet had a currency, the internet's currency will be blockchain and ETH. So imagine that if that was a currency, imagine that. So it's a bubble, but it's a bubble that is based on reality. Remember what Greenspan said. How do we know it's a bubble? Greenspan said, we don't know. We can only know afterwards. So is there a rational exuberance? Yes. But is that irrational exuberance backed by fact? Yes. So that's my call. So, I mean, it's your take, but I think that we're onto something big here. Yeah. Good morning from Nigeria. The market looks very volatile. That's Natalia saying. Just read that Bitcoin lost close to 14,000 of its going value. What's the way forward in light of such unpredictability? Why are you buying Bitcoin? That's the answer. Why are you buying Bitcoin? Why are you in this space? Are you buying Bitcoin to store your money from inflation? If your answer is yes, then what do you care about the price? If it loses 14%, how much will your dollar lose by inflation? Are you in Bitcoin to because you want to be a part of a growing ecosystem? If the answer is yes, then what do you care about the price? So you've got to ask yourself, why am I investing? If you know why you're investing, it's much easier for you to then answer the question, will I be here if the market goes up or not? I'm not asking you to invest, but I'm saying you have to ask yourself, why are you in this space? Yeah. So Sadiq is asking, you mentioned that Bitcoin is not a threat to the dollar, but to gold. I didn't mention the Fed chairman said that Bitcoin is a substitute to gold, not a substitute to the dollar. But it seems that transactions are being replaced with Bitcoin everywhere. Examples like Tesla and others. How do you think the government will reckon with this in the long run? Do you think they will find a way to centralize the decentralized economy? So Sadiq is asking how the government will react to Bitcoin. It's a good question. I think the governments are fighting a losing war. You can't ask the tide to go back. Is here to stay. You can regulate it like what India wants to do. You can say, okay, we're going to have digital currencies, but it's going to be the government digital currency, which defeats the purpose more or less. But it's here to stay. In what form, we are not sure, but it's going to be here to stay. So the government can fight it for a while, but ultimately, if Facebook gets a digital currency out there, then it's all over. Others would follow. Then currency no longer becomes the mandate of governments, but currency will become the mandate of individuals. So if I have a phone and I create output, I can buy a currency and trade. I don't have to go buy the central bank's currency. People forget that currencies in the past were issued by individuals, by railway companies, even by banks. It's a recent phenomenon that central banks issued currencies, and that was the only currency. The Bank of England for a long time was a privately held institution. Even in the Fed used to, the US dollar was backed by gold until Nixon took it off. So we're going back to the point where productivity is going to be tied with your own output expressed by your own currency. That's where I think we're going. Why is Tesla cutting payments in BTC? Yes, that's a good question. Why is Tesla not collecting Dogecoins? I don't know, but that's a very, very good question for the guys going about talking about buying the Dogecoin. Why is Tesla not collecting payments in Dogecoin, but only in Bitcoin? That's a good question. Which app can I use to buy and sell Bitcoin? That David, let's talk online. Can one invest in blockchain piecemeal without investing in cryptocurrency? Uma, yes, Mr. Obasi. Yes, you can invest in, I showed you the ecosystem of the BTC network. You can invest in the ecosystem without actually buying Bitcoin. That's actually a very, very good strategy. You could say, I don't want to buy the coins. I'm going to go and buy the company that creates the mining equipment, or I want to buy the fund that creates the equipment that the BTC guys use to do verifications. That's another good way to invest in the blockchain. Remember, the cryptocurrencies are just the currencies of the blockchain. The real investment is the blockchain. So Adetunji is asking, what happens to my coin if the company I bought coupon from, e.g., Coinbase, Binance collapse? I think you should put it in a wallet. If you buy a coin, put it in a wallet. So if it collapses, you still have it. The exchange does not own your currency, just like the stock exchange does not own the shares you buy. You own the shares you buy. So if the stock exchange collapses, what happens to your shares? Nothing. You go to the register of the company and you get your shares back. What is the possibility of buying a coin in any of this medium, e.g. the US, and move to Canada and change to fiat to hedge taxes? That's what people are doing. They are buying dollar or they're buying cryptocurrencies to keep their money away from the tax man. But like I said, IRS always gets paid. Yeah. Do you think Facebook DM will cause the price of Bitcoin to fall? No, I think the Facebook DM will cause the price of Bitcoin to go up because it will attract more people into Bitcoin, into ETH, into the cryptocurrency space, and there will be more demand because the ecosystem will get bigger. Is USDC not official US digital currency? No, the US has no official digital currency for now. They haven't created digital currencies. Yeah. So, guys, what I'm going to do, I'm going to stop the recording right now, but I'm going to stay here and keep answering the questions, right? And I'm also going to go on Twitter and also answer the questions, just so that we can get the recording up to a good size, so that when we share it, people can watch it. Yeah. So I'm going to stop the recording. Um, if you want to, you can talk to me on Twitter, and I'm going to answer all the questions there. But I think I've answered a ton of about 25 questions already here. Where can I buy Bitcoin? Yeah, let's talk about where you can buy Bitcoin. Remember that the SEC is talking about exchange, so I don't want to give an answer that might put us in trouble. But you can talk to me online, and I can give you an answer. What are your thoughts on the approach by the Standard University called Pi? I don't know what Pi is. So, I mean, Pi is just a crypto or a digital space and all that. It's going to be the same thing. I don't want to talk too much about Pi or separate currencies. What I'll say is this: buy what you think you want to use in the future. If you are buying for long term, buy the big boys. If you want to trade, then you can go trade the other guys. But whatever you buy, if there's no market for it, there's no market for it. I mean, who knows Pi? How many people know Pi? You can buy it now at a cheap price and it's going to go up. That's fine. But that means you are trading with it, correct? So if you want to trade, you want to go for those for the smaller coins that have a lower asset price, so that their price can go up by percentage terms. If you want to buy and hold, you want to go for the bigger boys. That's just my view, right? Okay. So I think this is good. So let me go ahead and stop the video, guys. I cannot thank you guys enough for attending. Huge attendance. I thank you. I thank the sponsors, all you guys. I'm just going to stop it, and I'll try to be here also on Twitter. If you have a question, send to me. There's also an email sent to me, and I'll answer all the questions, right? Just want to stop it so that the video is a bit smaller when we share it. Yeah. Okay. All right, thanks, guys. If I don't take a question, make sure you hit me back up on Twitter and I will do it. I appreciate you guys. Thank you so much. You guys have a great day and a good morning. Thank you. Bye.